So like, you don't really want to like, force a trade. Force a trade that's not there. Because that's only going to be counterproductive for you. That's only going to make you, jump in a trade you really shouldn't be, And one big thing is, like, if you don't understand and comprehend, like, as far as, like, the big movements of the news, especially since we're waiting for, since we were waiting for this monetary policy, like, just stay there and let the markets do its thing. You know what I'm saying?
Yeah.
Don't feel, like, pressured that you must jump in a trade. Everybody's trading. Oh man, I'm gonna jump in too, right?
Yeah.
Really, 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 really planning your trades as well. So like for me, I didn't really have a need to like have any type of trades this morning, just because, and I preach this a lot as far as the percentage, and I wanted to see what kind of news we're going to be, I guess, put out in a sense. So, what were they going to talk about? Rates. What was the outlook on things as far as like the health of the UK and all that? And from that, it pretty much just kind of like gives me an idea of what to look for. And if I trade later today, I'm gonna kind of look at the markets and kind of see what they give me. But like I know the U.S. economy had good news, right? Yeah. So in my mindset, if I see that the dollar, let's say I trade the dollar yen, if I see that the dollar yen, the dollar had great news, do we see a reasoning to short dollar yen?
No.
Okay, so like, and the other day we got hit. The yen got hit. There was a comment about the helicopter money and printing more yen, basically, right? So as we know, what happens when you print, pretty much you're just printing paper. The value is put out by the people. Okay, right? So when that comment came out, we saw the yen just essentially plummet, right? That's pretty much what happened. So I'm pretty sure none of us are still confused about, when a pair goes up, that means that the yen is weak, right? A lot of people feel like dollar yen going down means it's like weakening. No, it's the inverse, right? So it's really important. Like, and I'm going, on and on and on about how important fundamentals are, but you guys kind of see how everything clicks hand by hand. Like before you need technicals, before you even look at a chart, the kind of mindset I come in when I'm about to look at the chart. I already know these things as far as what happened to the dollar, in the past 12 hours, what happened to the yen in the past 12 hours, what happened, you know what I'm saying? So everything goes hand in hand to when my times to trade, what I'm looking for, right? Does that make sense?
Yes.
Okay. So, what pairs have you guys traded this week? I'm gonna go over like same thing, the pairs that I always trade, and I'm gonna go over a little more in depth as far as like what to look at. I'm gonna go a little more in depth today as far as like I'm about to hop on my computer. What's the first things I should do? I'm getting on. But I wanted to know what pairs you guys trade other than the yen, if you did. If you guys wanted to go over that, and then I'm gonna step into pretty much just a nice little short webinar today. I wanted to just kind of get that stuff out there first, because fundamentals are huge. Like they're huge. They give you a sense of relief when you're in a trade. You know that pair is very weak or is very strong. Okay, yeah, it's just gonna, it has the momentum to break that. But if, let's say, for example, if the yen is very weak, and you've seen it. I'm gonna show you guys in a second, but you've seen it bounce like in the past, 8 hours. You've seen it bounce there, but I'm looking at the yen is very weak, so it's probably not gonna bounce. I mean, it's not gonna break, right? It's very weak. It's not going to. It's just not going to. Like, there's no reasoning There's no reasoning. There's no strength. There's no news coming out. There's no new news. So I mean, all that stuff. I really want you guys to, every webinar, write down every little note. And I know, Brendan, you've been telling me that, good feedback, like everything that I've, pretty much explained to you off screen. Not even, you kind of see the importance of what I mean, like the mindset and the knowledge you want to have before even looking at a chart, right?
Yeah.
You get paid to be patient. You get paid to learn the skill before you even place a trade. Placing a trade and winning a trade, that's okay. You won the trade, but the most important thing is having the patience, having the knowledge of having a pretty good idea of where the markets are going to go, and you start by fundamentals. Does that make sense, guys?
Yes.
Yes. Okay. So, is there any pairs you guys trade other than the yen and stuff?
I have not traded any other pair so far this week.
I traded the yen in multiple pairs, Aussie and the euro and the British pound, and I also, the only outside pairs that I traded in was the British pound and the U.S. dollar, and also the euro and the U.S. dollar, because they both was affected by the NFP. So they dropped and reached uh, a low, and I was just capitalizing on that as far as just riding it up, uh, seeing if it would come back to the actual market that it was originally at. Uh, and yeah, that was the only two pairs that I jumped on besides yen.
Okay. All right, let me check out. Yeah, all right, I'm about to share my screen. Can you guys see it?
Yeah.
Yeah.
Oh, it went away. Oh,
So
there it is.
let's say for example, right now for me, I've been just focusing on big time on fundamentals right now. I actually told several people days ago. I was like, right now fundamentals they're gonna move the markets. Technicals, they're really irrelevant right now as far as that goes. After fundamentals are thrown out and stuff like that, you can have confirmations of it. But for now, don't try to base your trading on technicals, just because, especially today, I witnessed a lot of people just go the wrong way, right? And then trying to hedge their way out the big negative or something. So that's what I mean by how important fundamentals are. So let's say for example, when you're about to look at a chart, already have that in mind, right? You already know, okay, the pound got good news, the pound did this, unexpected, all this stuff. The thing about the news, right? The thing about the prime minister, the new prime minister, and all that, it all sounds very nice, very cool. Sounds very good to be true, right? A brand new prime minister, she promises all this, but in reality, it's like the Brexit, right? The Brexit campaign, the ones that were wanting to break out of the union, they promised a lot of stuff, right? They promised a lot of stuff to the people. That's the reasoning why the people voted out. But I think it was like minutes after they won or whatever. Okay, they're leaving the union. Minutes after that, they came out and said, "Oh, we know we promised all this, but oh, I'm sorry, guys. I don't think we'll be able to do it."
Sure.
So that's why I feel like, and this is in the back of my head, I feel like what happened today, monetary policy. I think next week, more news. I think that could change. I think they might come out and say, "Oh, just kidding. We're gonna do this and we're gonna do that." And I say this because I don't know if you guys followed this, but the other day there was an announcement about the lending. And they were supposed to be very successful. Everybody was happy. Everybody wants to, all this stuff. But in reality, a lot of people are scared, right? A lot of people are scared to take any type of credit, any type of lending, But on the numbers, what was thrown out, I think it's just to induce more buyers, really, and then kill them.
Yeah.
But that's my gut feeling. Because I was reading on stuff like that, and they were just talking about all this promises, right? And then they were talking about how feasible it is for them to make that actually happen, right?
Mm-hmm.
I mean, the pound went through the Brexit, the world went crazy, right? And now they're saying like, "Oh yeah, guys, we know the pound, it depreciated by, 30%, but don't worry about it, guys. We're gonna grow, 80%." I don't know. I mean, if you're in the union, they pretty much are gonna cut you off supply if you say so. If you want to say that, how can you assure people that? How can you assure people that you're actually gonna pull through when you promise the people all this and now you're kind of pulling back, right? So that's why I want you guys to kind of keep an eye on that. I just don't feel like people are comfortable right now to take out loans to any type of financial situation. I think that people are scared. Okay, so let's say for example, I'm gonna go over a call to buy. I'm gonna tell you why I'm called buy. So let's see on the daily, right? Are you guys using higher time frames to confirm your overall trend?
I do so every now and then, but I need to get more back into doing it more.
Right. Do you kind of see why I kind of look at the higher time frame? You see how clean this big W is?
Yeah.
So does that make sense, Slick Rick?
Yes, I see it.
Okay, so when you go on your higher time frame, you want to check for these things right here. You want to check for higher highs, lower highs. You want to check how prices react, right, to certain barriers, to certain zones, and stuff like that. And as we see here, we've been falling, right? And a lot of times when we dip like this, I would want to say 90% of the time we're going to retrace back to that line essentially, and then most likely we're going to come down. And with those moves, like that heavy move that it made, it's just going to fall that much harder, right? And this is the thing though. A lot of people want to, okay, it's going to go from here and it's going to free fall. They think about it they put it in a very, very big picture. This is the daily chart, so you want to kind of zoom in, on the time frame. So let's take for example, right now it's daily chart. So after the daily chart, I go in, and I think I showed you this, Brendan. I think I put it on. I'm pretty sure. I think I put it in the group chat. I think this when it was around here, when it was about to bounce out. But a lot of this is just based on my own analysis as far as the chart, and like I said, the yen with the helicopter money comment and all that, it weakened by a lot. And then when I saw this little W right here, with this big W, multi-session W, When I saw that, and when I saw something else, you guys see something right here? Let me zoom in. I want to see if you guys see it. You guys see something like after we broke this? You guys see something to the left?
It's kind of like it kind of hit like one of those tap consolidation zones.
Yeah. So like all the time, especially when you have a W like this and you see like a potential break or whatnot, always look to your left. Try to see how strong that is, right? And it took a while because it like bounced, came back, and then it pushed, and it was having a hard time. This is on the H4. So this was having the hardest time ever. And then this came back, it broke down again, it pulled back, and then it finally broke. After this, it was pretty much waiting for that retracement and get in again, right? I actually missed like this. I think it was on a Sunday. I just looked at it and it was up like 200 pips or something. Like, dang. But I was waiting for the pullback because after we broke here, if we go look back to the left, once we break resistance, it becomes support, correct?
Mm-hmm.
Yeah.
So now, after it broke, I kind of had a benchmark per se, right? I was like, okay, if it comes down and this holds, I have a benchmark to where, I could put my stop below the pivot or something, right? So I'd be risking 20, 25 pips, but as you see, the potential is a lot more, right?
Yeah.
So after you break this is the reasoning why I say the importance of looking back to the left. You see how this even bigger consolidation zone? So if you move back here, this little pivot's essentially right there, right? So once we break this, it's gonna be even more difficult to come back down, right? You guys see that?
Yeah.
Yeah.
So always when you're breaking resistance levels, look to your left to see how strong those levels were, because it's going to be very difficult for it to break and then pull back and then fall, right? So the majority of the time is, and I'm gonna keep going as time passes by. I'm gonna show a lot of these things. But do you guys know the 5-wave, the 3-wave, impulsive correction waves?
No, I don't know
So
that one.
essentially, what that is like to me on the hour or whatnot. Once I saw this double bottom and this W,
Mm-hmm.
you'll essentially get a hard move, right? After that hard move, you're gonna see a pullback. After I saw that pullback, I drew this line out just because I knew that this particular zone right here to your left, it was a nice support at that point, right? I drew that and then it came down and bounced off of it, and then I knew it was gonna be either a 3 or 5 wave count. How do I know it's gonna be a 3 or 5 wave count? Well, it's all decided based on to the left, the structure. So here we see two structures. So as I came back and bounced, and I came back and I saw, okay, this one's even stronger than this one. The chances of this breaking are minimal, right? So that's what happened. It came back, bounced, and shot up, right? So base everything on the past market movements, past market patterns, but kind of understand what's going on, at that point in time. Like I said before, the dollar got good news. The yen got crushed, right? So base, you're trading off of that. Don't try to make up, any type of trade, right? Don't try to sell it just because you hear a lot of people selling or whatever. Look at your fundamentals. Look at the strength. Have you guys been using the Easy Currency app I told you?
Yes.
So have you been using it as far as on different time frames and using it how have you guys been using it?
Well, for an example, last night I was looking at one of the pairs, and I seen a pattern. I think on the 1 hour, and I use Easy Currency to compare the two strengths of each pair, and that's one of the factors that helped me make my decision of whether or not to take this reversal pattern or not. And then once I reach my 30 pips, I close.
Right. Yep. Yeah, because I know several people ask me like, well, how do you use it, whatever. I'm like, you essentially use it like you're watching your chart. So you're looking on the 15 minute, you're looking at the moves up ahead, right? So if you look at the overall picture, um, the yen is still, it's still gaining strength. It still has strength, right?
Yeah.
It was just one of those comments that it weakens currencies and stuff like that. That's the main reason why I say try to react to the markets. Don't try so much like know, being a mind reader and trying to predict, right, exactly what's going to happen. So have you been using it, Ricky?
Yeah, I've used it. I haven't really compared it as far as like what I think his name is David just said, but I've glanced at it here and there. I need to be a little bit more consistent with it though.
Yeah. Use it as a confirmation. It's not like a little signal app. It's not going to tell you to sell or buy.
Hmm.
It's really just like a second confirmation.
Yeah.
Just as like let's say if you use ADX, if you use support and resistance, that's confirmation. Fundamentals confirmation. Um, you don't need 20 confirmations either.
Hmm.
But if you have solid, 2, 3, 4 confirmations, you're solid. Chances of you being in the wrong trade are very minimal. You know. Now, if you hear everyone saying, "I'm going to sell the pound yen," "I'm going to sell the pound dollar," "I'm going to sell," you're pretty much at their mercy at that point. Whatever those people said. After the trade goes south, you're gonna be like, "Oh man," but like, you know, isn't that, isn't that? One of my personal students, like he texted me yesterday. He was like, "Hey man, this group's saying that sell the euro yen," and he's like, "I'm gonna hop in," and I was like, all right. I was not even on the chart at that time, and then I looked at the chart, and I was like, oh my god, this is gonna pull back, yeah, but then it's gonna hit a very strong support, and right when we get strong supports, it's gonna rally hard, especially the time that it was. I think it was around this time, and I shot him a text. I was like, yo, if you're up in profit, I would take it, right? I would take it. I don't think he did, and like I think it was within 5 minutes or whatever, it shot up. He was up like 30 pips, and then he was negative like 40. No stop loss, nothing. So like I've told you this a lot, Brendan, but especially like on signals and stuff, um, always look at your chart and just tell yourself, okay, I'm gonna wait for this pullback. I'm gonna wait for this. If it doesn't pull back, it's very risky to just jump on, right? Because we're not momentum traders. We don't see a bullish candle and we buy. We don't see a bearish and we sell, right?
Yeah.
So if you see a signal, go to your 15 minute, go to your 5, and see if there's an entry point, right?
Yeah.
If not, like I always say, if you have a question, just about the signal, or whatever, just shoot me a message. But I'm usually pretty updated. I try to keep you guys updated, like on the trades and stuff.
Hmm.
But if you have a question as far as that goes, always ask. Don't like, okay, get up with a signal, whatever. Let me go ahead and jump in. Um, I try to kind of think ahead as far as like how you guys are thinking.
Hmm.
So I want to kind of ease in as far as like giving just too many signals and you guys just verbatim just go into your platform and just entering them, right? So I want to make sure you guys are understanding why you're entering them. You know what I'm saying?
Yeah.
Other than just yeah, go sell, go buy. Because like right now, and I see it like especially when people like Snapchat and everything. Oh man, are you selling this? Are you buying? They're just trying to see if they're right. They're probably in the trade already or something. But like I said, I'm very I got a lot of self control as far as like it's not my time. It's not my trading time. Why am I gonna get in a trade, right? I'm 90% of the time, uh, the trade's not gonna move. Like the main moves, they're not gonna happen before my trading times. Rare the time. Like yesterday, I think GJ was falling off, and one of my buddies was like, "Oh man, you're missing the drop. If I were you, I would just shoot in. I would just like jump in." And I looked at it, and it was approaching one of my pivots. It was like, I think, and the funny thing is, I think he broke even after like I was like, yeah, I don't think you should hold that. This right here, when it made that like triple top, I guess you could say, and then it came down to this support. Um, do you guys kind of see what if you look to your left, this zone right here, like this, um, how difficult this was gonna be to break?
Yeah.
Like right here. So
Yeah.
like when he told me if I were you, I'd go ahead and sell. I mean, if I didn't get in here, because this pivot right here was protecting this from going any higher right now. So I expect some type of pullback. Because look, if you look, I mean, look how many pips I'm doing, right? Just insane. This is insane. So I got in here and I wrote it up for a little bit to the pivot. So after it hit the pivot, it started pulling back. So as we know, GJ, even if it's on the range, it's ranging in like 80, 100, 150 pips, right? It's like moves. As it's ranging, it's moved, really. So, do you guys kind of understand what I mean by like market structure? How important it is to like really like look to your left, look to your right, um, you know, look at the setup that's there. If it is, and look to monetize it. But
Yeah.
don't like feel like, okay, I'm gonna get on agent. I'm gonna take my first trade, right? It doesn't work like that. That's how you lose your money.
Yeah.
Do you guys have any questions so far, or anything? I just wanted to go over those key points as far as like market structure, what to look at the chart, and stuff like that. As far as here, guys, if you were wanting to sell this, it's a very risky trade right now. If you look to your market, we have a pivot here, and essentially this is going to be protected. And if you even wanted to, you can draw this right here. You see how I'm going to erase this right here. I'm going to show you guys why I drew that. You guys kind of see why I drew that, that line, to kind of give you an overview.
Yeah.
You see how this is very important. So after we breach this and we close above, you see how we're closing above this, and you see how the markets repeat themselves, right? You see how the same thing happened here.
Mm-hmm.
Yeah.
We had a strong break, and we're on the H4, right?
Yeah.
And what do you think is going to happen? We're going to rally higher, right? So recognizing that thing, man, being patient, because that's how a lot of people, selling here at support, selling here as it's rising, they're still selling, like it's little things like that. It's what makes you lose. Being patient, okay, I'm going to wait. Okay, I see a breach. Let me go ahead and put a buy in the lower time frame. I put my stop here, below the support, right? Again, the quicker you can like recognize the move, you can get in the earliest, right? So your stop can be very tight, right? You're less likely to risk more pips for gains, exactly, essentially. So does that make sense to you guys? What I mean by when it broke out and it pretty much closed above this structure?
Yeah.
That it, you can count the hours that it was in this little box, right? Especially as you're getting comfortable with trading, I want you guys to draw these little boxes. I want you guys to draw these trend lines. Like me, to be honest, I don't really need them. I kind of just eye it. I kind of see it. I drew these because like some students, I want them to see, like visually see what I'm talking about, because it helps you a lot. After a while, you don't need it, right? It's like if you look at it, you guys already whatever I talked about, you already see it, right? So we talked about it, right? You double bottom, see structure here, you see break, you see this little this space right here. You see how this space to your left? There's nothing. There's nothing very difficult, I guess. There's no barriers. But why when we broke this, we have enough structure, and we have to the left. What do we have there? Strong structure, right? So it's going to be very difficult. But then What happened over here? Right when we broke this, we rallied. And look at this. I'm gonna see what. But what happened here when we rallied and we approached another structure here? What happened?
It began to pull down.
See, so if you guys look on the higher time frames again, you see how strong this is.
Yeah.
So this is the thing. Even though we have a structure here, it's being protected. If we breach that structure, we're gonna go up probably to the trend line, which is roughly 107, right? That's what I mean by just being patient. Just being patient. Like don't rush a trade. Like around right now to about 10:30, 11, there's gonna be moves. Moves are gonna happen. But just being like patient, right? What I do is I'll set little alerts. I think you can do it on MT4, but I have I think it's called call alerts or something. I think it's in the Apple Store. And it just you put little notifications to notify you when price reaches 105.90 or something, right?
Yeah.
Where maybe the resistance at or stuff like that, or maybe if it breaks this, this is going to be another free fall, right? Until we approach the bottom of this box. So just little things like that, guys. Prepare yourself. Does all that make sense, guys? I don't want to be talking.
Yep.
Yeah, it makes plenty of sense.
Do you guys have any questions right now, or something you want me to go over? I wanted to kind of get all that point across because I feel like that's the most important thing as far as recognizing market structure and stuff like that.
I have one question. I understand everything as far as the trend lines and stuff like that. The only thing that I don't know is the red, the green, and the yellow box. Is that the fib or
what green box?
I'm sorry, the lines, not the box.
Red. These are pivot points.
Okay.
Yeah, these are pivot points, and I like them just because they give me a predetermined support and resistance. That's essentially what it is. Fibs is the same thing.
Okay.
Pretty much predetermined support and resistance. There's just events in here. It's math. And what I want to explain to people is that all these pivots and stuff are essentially just think of them like predetermined price movements that the big market makers already decided, right? Everything's already predetermined. But I think we talked about it last time. The big central banks, they plan, to acquire a smaller company. You do this already, right? So they already know, the shift of the money, right? Shift of the law. They already know this stuff. That's why you see a lot of companies buying out smaller companies. That's why you see, acquisitions. That's why you see, bankruptcies. That's why you see a lot of stuff, right? Everything's predetermined. Yeah. The funny thing is that even the companies that go bankrupt, they're probably part owners of another bigger company. It's all just like a shift in hands, really. Shift in power. It's not. A lot of people feel like, oh, this person went bankrupt. No, that person's still rich as heck. He still owns probably 3 other companies. It might not be under his name, but he still has his hands, right?
Mm-hmm.
So I really, really, really hope you guys kind of understand, and all the stuff I told you today makes sense. Any more questions, or you want me to go over something real quick?
Another one question. What source of news do you use? Do you use the Sand Direct News or?
I do look at that because I like how it little pops up like that.
Yeah.
But I think I recommended last time Wall Street Journal, New York Times, Bloomberg. Bloomberg is really good because it's a lot of times it's live. I'm not gonna put live stream right there with Arnie and stuff, but it's updated within seconds.
Right.
You kind of whatever happens, and now you got a chance to react. And I have some paid news feeds and stuff, but I mean I'll recommend those down the line.
Nice, nice, nice.
But yeah, oh, I wanted to lastly, you guys can write these stuff down. I want you guys to be very good and knowledgeable as far as like what news you want to be looking and researching. You know, you want to be researching GDP. You want to be on top of monetary policy. Monetary policy is essentially the health of the economy. You know, what goals, what plans, what procedures, you know, what things do the government have in place to make that economy great again. You know, like let's say for example right now, the UK, even though it's at a very vulnerable place, a lot of times, if not all the times, that major crashes have happened, you always see like a bigger rally. You know, a bigger rally. You know, we saw that in the U.S. market crash. Like the U.S. is probably the market's gonna crash probably like uh, in a few months. We're probably gonna see some heavy movement, but it's good. It's good, right? Because there's gonna be so many more jobs. There's gonna be so many more businesses. There's gonna be so much more stuff. So it's good that economies go through these cycles, right?
Mm-hmm.
To me, it thrills me. You know, I'm not gonna say that, oh, you know, because a lot of people are gonna lose their jobs and stuff, but you know, just in the position we are, whether it goes up, down, whatever it wants to do, we can capitalize, right? So yeah, GDP, monetary policy, and then you want to look at rates. Rates. Do you guys kind of comprehend what I mean by rates and like GDP and stuff?
Yeah.
So understand that, and that gives you again a good idea of the health of the economy. If people are making money, right? So the GDP of the United States, I think, is about 38,000. So people make about that. That's how much gross domestic product. That's how much people produce, I guess. You know, and there's some other economies that people are pulling 50, 60, 80, right? So they're essentially a little healthy in that sector, but then let's say their monetary policy can be messed up, right?
Yeah.
They're trying to like put a bunch of stimulus plans together, and essentially when you throw in a bunch of money where people need it and stuff, you're probably like either printing too much money, extra money, you're doing all this extra stuff, it's regular stuff that is going to hurt your economy. That's why when like stimulus plans and all that stuff is talked about, the economy gets crazy, right? Like perfect example, the yen. They're trying to like throwing up just random money, make up money, essentially, make up money. Like a quick little forex, whatever history and stuff. Back in the day, trade, and I'm gonna. It goes hand in hand with trade balance. Trade was done like, I have rice, you have beans, let's exchange this, right? But as time passed, we put in value into a piece of paper. We put in value into gold. We put in value into these things, right? Yeah, that's pretty much how it all unfolded, right? So that's so now I'm pretty sure you guys, if you haven't, you probably will hear the term or the sentence or the quote. The dollar itself is meaningless. It's worthless, right? But we find meaning for it, right? $100 bill. It really doesn't have any value. It's just a piece of paper, but we put in a value as society. Yeah, it's worth $100. With $100, I can get this. that's pretty much it. It doesn't really like if it burns or something, it's whatever, right? But gold and all this extra stuff, like especially like raw materials and these things and like things that we can get if they're gone, that has a lot more value, right? It's the value in itself, right? Because certain materials, certain things we need to survive. It's not like money or whatever. We can just print more, right?
Right.
So really understanding that and like GDP, monetary policy, rates, and then trade balance. Trade balance basically is. Do you guys understand what trade balance is? Have an idea?
I really don't know what trade balance is.
Yeah, me neither.
Trade balance is essentially exporting and importing. Okay, so when you have, um, they're not really bad. This is the thing. It's a misunderstanding. It's not really bad that an economy imports or exports. It's actually good that they do both because this is the thing. We go back to the first example as far as the exchange. I have rice. You have beans, right? We both are good at that. Producing beans, producing rice, right? So you do it better than me. So I'm gonna let you do that, and I'm gonna do this, right? But then when you have to like buy like um, let's say you gotta also buy corn, you gotta also buy I don't know lettuce and tomatoes and stuff like that, and you're only good at one thing. What does that look like?
Uh, very from what I see, it's kind of like one dimensional. Like,
Yeah. Does that make sense? What I mean by like, okay, I'm only good at producing beans. I have to go out there and spend money on rice. I gotta spend money on lettuce. I gotta spend money on, and I'm putting in the trade perspective. Not like right now that I gotta go. Of course, you gotta go to the store and stuff. Not a lot of people self-produce themselves. They don't have gardens or anything. But I'm just putting in the perspective of like um, qualities and resources, right? So when you have an economy that that is very structured, that imports sufficient, their weaknesses, they cannot physically or feasibly like produce, then that's okay. But when you have an economy that depends on like imports, that's bad because you're at the mercy. You're at the mercy of the person that imports you. You think, they decide price, they decide when they want to raise it or how much they want to give you. Right? You don't have control of that. Um, and what's one economy that's doing that right now, big time? Just because the United States is so big that a lot of people don't think it's affecting them, but what do we do here? We import basically everything, right? We don't have anything here. Even the cars that are made in the U.S., they're not really made here. They're just put together, but a lot of the materials and stuff they're not here, right?
Right.
So that's what I mean by trade balance. When you see news like that, that's what I mean by that. Read on a few articles, take a peek at what's going on, how much importing has been done this month, how much exporting has been done. And you get a really good idea when those news come out, what kind of strength the economy's going to have. Does that make sense, guys?
Yeah.
yeah,
And last but not least, unemployment changes. Of course, if we have a very, very big increase in unemployment, it's not bad. It's not good for the economy, right? Pretty much just common sense. So that's one last big talking point when it comes to fundamentals and news. Those things right there, if you just keep up to date week by week, you're going to be sharp. You're going to have a better outlook on where the markets are headed, other than just drawing little lines and look at a colorful chart. Now, base this on just because I follow so many like multi-million dollar traders, and I see the stuff they talk about. On a quick side note, remember Brendan, like when we were in that group that I'm not going to name, they always talked about no news, no this, no. Remember, everything was just like, this and that. And I was a rebel, right? I was doing my own research. I was doing my own thing that I was seeing is more successful people looking at it, analyzing fundamentals, getting a really good idea of these things. And I was like, it makes sense because I started implementing it. And guess what? Before even me looking at a chart, I already kind of had a good idea. Okay, the dollar's going to be strong for the next 8 hours, or etc. And this and that, right? I saw my fundamentals. I looked. We had a close below this. We had a close above this, and I had a good idea of the outlook of the economy and the trade that I was going to get into. Does that make sense?
yeah.
Cool. Do you guys have any more questions for me before I Get out.
No doubt. Nah, man, I think I'm good to go.
Yeah, man, I'm pretty clear, man. Get more and more information every webinar. Pretty much gave me everything blow for blow, so I don't have any questions.
Okay, guys. All right. Well, yeah, man. Just just keep an eye, guys. Like, don't rush anything. The little key talking points I talked about. Have those as a priority. Have like make sure your trading plan is like follow through, right? Like if you go for a certain percentage a day, like I told you, Brandon, just keep doing that. Keep doing that percent a day. Keep looking for. I have to wait until this breaks and closes. I have to. You know, not just because all these people are saying sell now at support. You think to yourself, okay, it's right at support. Why would I sell, right?
Yeah.
It's resistance. Why would I buy? No, I'm gonna wait if I see a break. I'm gonna see if I see a close, right? Minimal time frame, M30. I want to see that candle close, and I want to see that movement, right? Have that decision to wait an extra 15 minutes until that candle closes, right?
Yeah.
Because so many people, man, they get caught in that. Oh, everybody's selling. Everybody in the world is selling. They go to, if I miss it, at least I didn't lose money. That's how I'll wait, man. Like right now, my trading time is pretty much on right now, so I'll see what's setting up and stuff. But I'm about to go eat and stuff, so if I miss anything, I missed it. I missed it, right? I'm already doing well for the week, so it is what it is, But I have that mindset that like if I miss it, I miss it. It doesn't hurt me, right? Because I think by this time you should be pretty much up for the week, anyways, right? I don't really trade tonight, just because I think you should be up at least 12% for the week by this time, right?
Mm.
And I know, Brent, I know you're pretty much up for the week, right?
Yes, so far for the week, I made 10%.
Okay. Yep. Yeah, like I told you, that's solid, man. So if you wanted to, today could be a bonus. So just cut your risk by half and let that thing go. You're pretty much good for the week, right? And this is the thing. The account size doesn't matter. What matters is the skill and making that consistent. Because like we spoke before, let's say you have a 500 account dollar today. 3 weeks from now, it might be like 950, right?
Yeah.
From then, it might be 1500. X amount of weeks after, it might be 2300, right? And your earnings are being compounded by that percentage, right?
Yeah.
Right when you get to the 1, 2, 3K range, that's when you start making 100, 150, 300. People on average make probably like I don't know what minimum wage is now, but I think like 50, $60 maybe on average. That's what people make a day on a job, whatever. And then of course the bigger percentage they're pulling higher figures, but then again they're pulling like 1,000 hours a week. But put that in perspective, guys. Write those things down. What I mean by like not so much comparing yourself to like the working people or the working class, but like put in that perspective where like you have a benchmark.
Mm-hmm.
All right, with 150 a day, I trade 3-4 days, I can make $500-$600 in like 2-3 trading days, right?
Yeah.
I'm free for the rest of the week, right?
Yeah.
The thing I wanna like put in you guys is not so much the money, it's the freedom.
Yeah.
You wanna work smart. You wanna work less, but you want your income to skyrocket more as time passes.
Yeah.
That was one of my main goals. I was doing well already before Forex, but my thing was like I didn't want to work anymore like 60, 80 hours a week, right?
Yeah.
I wanted to only work maybe like 1, 2, 3 hours a day, right? Instead of like 12 to 15, right?
Mm-hmm.
So put that in perspective and plan that out. Visualize it, but visualization and enacting on it are two different things.
Yeah.
Thinking about it and all stuff, daydreaming about it, enacting on it is two different things. So just write down your tailor your trading plan to yourself, to your life, not to Bobby, not to whatever he's doing. No, not to him, because the thing is that he has a different life, he has a different lifestyle. So tailor everything your goals to yourself, right? I need to make 200-300 to quit my job, right? That's 2-3 times more than what I'm making now, right? It is this. Put yourself in those shoes where you're setting those exact goals, not unrealistic goals, not none of that. Setting yourself for success instead of like, okay, you start trading forex and you get one trade right, and then you start setting yourself up. Oh man, in a few days, in a few weeks, I'm gonna start making 3K days, right? Like, what do you think is gonna happen when you think like that? You can over leverage your account, right?
Yeah.
So definitely, does that all make sense, guys?
Yeah, it does.
I know I ramble a lot, but this is like a lot of people don't tell you this stuff.
That's true.
I'm glad. I'm very thankful. The more you talk, the more I get informed. So I love the fact that you're informing us more and more.
Yeah. So yeah, definitely like plan. I always tell people the type of life you want to live, plan it and live it. No talking, right? It's like literally like you want to make this much, you want to do this. This is what you got to do. You got to have self control. You got to understand that this is a time thing, right? It's a time thing. Your skill, it just increments like that, right? You remember, Ben, when I think you reached out to me and we started chatting, and you're like, I opened a lot of eyes on you because maybe you were thinking like, everybody else, right? Like, oh, I got to do this, I got to do that, And I pretty much told you like, just simplify things. This is what you need to do, right? Boom, 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 and it kind of made sense, right? It made a lot of sense to you. So, thanks for being on, guys, and I hope I was of value, and I gave you guys some good info.
Always a value.
Definitely did. I do have one question though.
Yeah.
Is it all right to trade on Fridays?
I don't, man. I don't even like I told you. That's why I base my trading on like basically today. I can probably trade agent in a little bit if I have time, but I'm pretty much done for the week.
Yeah.
This means I set myself up to that, right? Since Sunday, I pretty much said, okay, this is probably gonna go here. These are the type of pips and percentages I'll probably get each day. And then once that was achieved, then it's like, okay. As every day went by, I was risking less. Does that make sense?
Yeah.
So in the first 2-3 days, whatever, I made. I made more than 10-12% a day, just because the setups were there. Not really. You saw. I think I showed you some of my trades, Brendan. But you saw. I didn't really risk more. I literally actually just lowered my lot size, and I just let those pips run, right? But GJ was like 200 pips a year. So it's like as the days go by, and again, time sensitive. You want to be in the screens, guys, less time, right?
Yeah.
You want to be in less time. You want to be able to get those percentages up without risking, right? So early in the week, try to get your percentages up, right? Your goal is 5% a day, but let your winners run, cut your losers short quick, right?
Yeah.
And somebody asked me this earlier today. But how about if you lose? Like, how about if you're up 6-7% and you lose 3%? You're up 4%. What is there about? Yeah, but do you care if you lose? I'm like, not really. I'm up 4% for the day.
Yeah.
I'm up 4%. Like, there's nothing to say about that. All about percentages. And think about the positive side. Don't think about, oh man, I lost or whatever. This is not like a winning streak contest where you try to win 20 streaks or something. Like, I'm pretty sure you guys see that on social media or whatever, like the binary people that, I'm up 20 wins in and lost, right? This is not that. We're not in that little gambling business. We're more like, you know, we want our return on our investment. We want progressive growth. We want longevity, right?
Yeah.
So that's how you get that, based on percentages, based on growth, and based on consistency. Other than trying to win 50 trades in a row, right?
Right.
No one does that. No one does that as far as like, oh, I'll never lose or I'll never. No, you'll never lose as far as like, let's say on a day. It's rare the time where I'll be negative for the day, but I'll lose a couple trades. But to me, I rarely lose just because I'll get my percentage regardless. Even if it's just 2%, I'm still positive for the day, right?
Yeah.
Like that doesn't matter to me. I'm still positive. Yeah, I lost 3 trades and only won 2, but I'm still up. I lost 2% on both trades. I lost 4%. Then I made 12% in the other trades.
Yeah.
Right? It's a numbers game.
Yeah.
All right, guys. Any more questions before I head out?
I'm good so far on this side.
One more question, if you don't mind. So when you enter a trade, right? Is it possible that the market reacts differently when you enter a trade and it's an incorrect entry? Like, say if you enter a trade and you're anticipating the market going up, right? And you analyze the charts, you looked at everything as far as your confirmations, and say the market just stops or it reverses. Is that a sign of a bad entry or a bad trade?
So you said if you go negative.
Yes.
Here's a talking point on that. If you jump in a trade and you go negative a little bit, it happens.
Mm-hmm.
Nobody, if anybody says that they're lying, nobody just jumps in a trade and goes in deep profit. You're up 60 pips real quick. Mm-hmm. No, sometimes you're negative. Jump in, you're negative. Because one, you're going to be negative with the spreads anyways.
Right.
So,
mm-hmm.
I'll jump in. And like, let's say for example, if you're negative and you're like, oh man, it's not moving or whatever, or let's say you start going deep negative, right?
Yeah.
Don't just sit there and like hold your mouse on the little close button, right? Like analyze it. Is it were you on the right side or were you on the wrong side? Did you sell in support? Then you're probably on the wrong side, right?
Right.
So if you sold at support and it's like if it's like 4:00 p.m. Chances are you're probably gonna get messed up because market resets at 5, right?
Mm-hmm.
So that thing might retrace more. You might be more deep profit, more deep negative.
Right.
So those little talking points as far as that goes.
Mm-hmm.
Yeah, if you start going into deep negative, you're on the wrong side. Being negative to start is normal.
Okay.
You got spreads, you got this, you got Now the thing is like, did you just like I talked about earlier? Did you just jump in on a bearish candle, or did you jump in on a bearish movement? There's a difference,
mm-hmm.
right? You jumped in on 1 minute on a bearish candle, right? And then on the 15 minutes, it's like bullish as heck, right?
Yeah.
So yeah, like that's the importance of trend.
Okay.
We're trading with a trend, or at least we let's say we're gonna trade a pullback. So we're trading that pullback. We're not saying, okay, this is going to go up, right, long term or something. Like let's say, for example, when somebody asks me or somebody tells me, I'm buying this, I look at it and I'm like, it's not a big downtrend. Does he mean like scalp? Like, how many bids? Like, I'm trying to figure out, right?
Mm-hmm.
And a lot of times I'm like, all right, I don't know. I guess he's going to do whatever he wants, right? So then I go look at the chart and I'm like, all right, I'm going to sell this, right? Mm-hmm. I'm going to sell this, and I'm going to put my stop at 20, 30 pips, whatever, and I'm going to go for like 80, 100, right?
Yeah.
And that person tells me, oh man, I got stopped out, and I'm like, what were you trying to do? Well, I was trying to buy, and I'm like, to where? Oh, I was going for at least 150 pips. I'm like, how? That was like just a pullback,
Yeah.
So being able to recognize what are you trading, right?
Right.
Are you trading like a 5-15 pip scalp? Or
mm-hmm.
What are you doing, right? To me, I'll decide what I want to do at that point in time. Okay, let me scout this up, or let me scout this pullback, or let me do this. Um, I'll kind of explain something else where I think I explained to somebody yesterday and actually did it. He was negative, and I told him, I was like, look, if you have the confidence, you can scalp your way out of a negative.
Hmm.
Maybe we'll go over that next time. Um, and kind of get yourself, a few profits. Let's say, for example, you're negative $200-300,
Mm-hmm.
and it's like ranging, or it's playing with your feelings and stuff like that.
Mm-hmm.
There's something that I would recommend you to scalp your way out. Maybe recover $20 here, $30 here, stuff like that.
Yeah.
And you're only going to be negative. You're only going to be negative like $80, right? And then you can decide then, okay, I can cut this. I just recovered $100.
Mm-hmm.
Or I can cut this, or I can just wait. Or now I feel more confident. I'm gonna hang out. I have a cushion now. There's a lot of things as far as negative and stuff like that, but I definitely don't recommend, like, if you're in deep negative, don't keep holding. Just cut it.
Yeah.
Just go ahead and cut it. That's why I say for now, as you guys are getting comfortable and more comfortable,
Mm-hmm.
go ahead and set a stop loss. And that stop loss, you're gonna set it depending on your entry, right? So let's say, for example, if you missed an entry,
Mm-hmm.
wait for that pullback. Don't jump in. Look on your 5 and 15 minutes. Don't jump in. You know what I'm saying? Like, if it's dropping,
Mm-hmm.
please wait for the pullback. Please wait for the pullback. Don't jump in. Or be willing to accept that you're going to be negative like 20 pips. That pullback's going to be 20 pips. After you jump in and let's say that pullback hits you,
Mm-hmm.
I always recommend like re-entering again, right?
Mm-hmm.
And we'll go over that again next time.
Mm-hmm.
As far as like the lot distribution and stuff.
All right.
Let's say, for example, you entered and oh man, I entered at 0.05. Dang, I'm negative 20 pips, right? Now I maybe recommend you to enter like a 0.02, so that little 0.02 can recover some negative. Let's say, for example, now it's going to start falling.
Mm-hmm.
Then you can stop that, and then I'll tell you, all right, now after that 0.02 is deep profit, you're only negative like 0.03 now instead of like you were down like 1.5%.
Mm-hmm.
Then I'll tell you, okay, go ahead and stack on the next pullback, stack a 0.01, right, and then let that run. And okay, you're up 2%, 3%, 4%. Oh, that looks like it's having a struggle to break that support. All right, now go ahead and close all of them. Right.
Right.
You see how it kind of worked instead of like, I know some people are negative and they're just staring at it. Oh my God, come on, go down, go down, go down. No, I mean, decide. Are you going to cut it, or are you gonna, or you still, or your bias is still short?
Yeah.
You're still going to go down. All right, then why not get some, get one or two more contracts in there so you can recover your loss? But you won't have to do that if you just wait for the pullbacks and stuff like that. I actually like to stack like 2 or 3 contracts just because I want to get my pips before time for everyone. So let's say, for example, like GJ, I know the other day shot up like 100 and some pips.
Mm-hmm.
I only caught on my first position. I only caught like 80. Then on my second one, I caught 60, and the other one I caught 50. So in total, I caught more pips or whatever than the move DJ. The pips DJ went up, and I caught them in less time. So I took profit before it kept shooting up. I think it shot up another 30, 40 pips after I took profit. But you see how the least time you're in the markets, it's better, right? A little more comfortable. It's less time consuming, stuff like that.
Yeah.
Right.
All right, guys. Well, if you're gonna trade tonight, just be careful. Wait for structure, set up, and wait for that. Don't jump in trades. And I'll keep an eye in a little bit. If I see something, I'll send it out like that. But I like to see like high probability trades. I don't like to like unless like you're side by side and I tell you, look, you see this, man? Okay, if this goes in, it's all right. Cause you like side by side with me, you can execute that instant. But I know a lot of times when I send something out, somebody might look at it like 30, 45 minutes later.
Yeah.
So it's like, oh, okay, now you're kind of jumping in. So yeah, guys, just message me. If you have any questions later or whatever. I got you.
All right, man.
All right, bro. Appreciate the webinar, man. Very thankful for the information, and you have a nice day.
All right, guys. You have a great day as well. And I'll talk to you boys later.
All right, man.
All right. Take it easy.
Peace.